Okay, everybody, it's me, Gregory Mannarino. It is Thursday, August 12th, 2021. Lots of stuff going on already this morning. I really don't know where to start. We got another warning from Citigroup with regard to this market. They are talking about a drop which could be significant, like very soon. Okay, whatever. What are we supposed to do with this? Again, you can't sit here and just stare at the stock market and wonder what it's going to do. You have to realize that the stock market is deriving value from several things. Number one is deriving value from the Federal Reserve's balance sheet, which is hyper-ballooning, and of course, the debt hyper-bubble. Now, look at that 10-year yield, like right now. It's 1.37. Okay, this is really a good spot for the stock market. And if, in fact, Citigroup is right here, and we do get a drop in this market, a significant drop, as long as that 10-year yield remains stable, as long as the Federal Reserve continues to do what they are doing, and they have no intention of stopping, despite the propaganda that we keep hearing as of late about tapering sooner than later. It's not going to happen. The market's going higher. So I don't know what Citigroup is talking about. And again, if it does drop, we're going to buy that dip. We're going to buy that dip big time. You understand? So, okay. So this is the second warning from Citigroup. Let's see if it plays out to be true. Again, watch that 10-year yield, pretty much period the end. Listen to what the Federal Reserve is. No, don't listen to what they're saying because they're just trying to keep people off balance. But just look at what they're doing. Okay, what they say and what they are doing are different things. And they're going to be increasing asset purchases, not tapering, not cutting back, especially in the face of more bad economic news that we got today. Which let's cover that right now. So we found out that food prices are surging. They continue to surge. Like we need them to tell us this? Duh. Seriously? Inflation is skyrocketing. The producer price index is rising. I mean, you can't make this stuff up. And then we found out today, people, listen to what I'm going to tell you. Another 375,000 people, the numbers they're allowing us to know, last week applied for first-time unemployment benefits. We have an economy in free fall. At the same time, real wages are cratering and inflation is surging. Doesn't sound good to me. How does it sound to you? Anyway, back to this market. We've had record high yesterday with the Dow and the NASDAQ. This market needs a pullback. Is it going to get it? I don't know. We don't have them anymore. I wish we did because it would present opportunities for my lions and myself to buy this market on sale. And if Citigroup again is correct and we do see a drop in this market, as long as the dynamics that are driving this market remain in place, and I believe they will, it's going to be a massive buying opportunity. And look, we haven't had, as you well know, a correction in this market, a normal correction in this market in a very long time. Every single dip gets bought back up. It's a frightening prospect because this is not normal for the market. Let's move forward here. I already explained to you about the 10-year yield. Okay, 1.37. Crude oil right now is under a little bit of pressure after an astonishing rebound yesterday. Good. I would like to see crude fall a little bit, I'll be honest with you. Establish a new floor, and then it could be because it's going much higher. Period. Gold, silver, and cryptocurrencies right now are under a little pressure. Okay, that's fine too. I explained to you about gold and silver. They need to consolidate here after the precipitous fall that they've had as of late. The same thing happened to cryptos. If you remember, they got cut in half, more than half. They traded sideways for a while. They consolidated, and then they started to surge higher. Cryptos as well could use a little bit of a pullback. Establish a new floor, go higher. That's how the market works. It's very, very simple. I think you all know that. The dollar right now is slightly higher. Okay. So that's the setup this morning here. Another several rounds of abysmal, off the Richter scale, terrible economic news. And this is hurting real people. I want you to consider what I said. We got another 375,000 people applying for first-time unemployment benefits, an epic number. And it's not just a number. This is about people. We got real wages cratering with inflation surging. And turn on Bloomberg, Fox Business, or CNBC. They're going to try to tell you this is all good. Again, they are reading a script. They have no conception at all about how the market really works and how this is affecting people. All they're doing is again, propagandizing you. It's all some kind of twisted mechanism, and you all know that. Anyway, so there's our setup for the market today. Let's see where this goes. Let's see if they prop up crude. If they prop up crude oil here with the 10-year yield where it is, this market's going to gain, especially in the face of bad economic news that we got here. The dollar strength, it's slight right now. So I don't know what kind of factor that's going to be here. Again, what do we want to see from a market standpoint? A weaker dollar. It's not great from a human standpoint, but the market loves the weak dollar. Okay, we all know that. So we want to see that from a market standpoint. We want to see the 10-year yield remain about where it is or in a range where it is. We want to see crude oil getting bid higher. And of course, we know the Fed's balance sheet is going to inflate and it's not going to stop. That's what the market wants. I believe that's what the market's going to get. And we're going to get record high, record high, record high. Period. At the end. And any dip in this market is going to be a buying opportunity as long as these four elements stay in place. So it's going to be so interesting to me to see if Citigroup is right on their second warning now. Second warning about this market. What do they want people to do? Close positions? Start shorting this market? I don't know what they're doing here. Okay, and I really don't even know what they're looking at. Maybe they think the market is due, and there's no such thing as due, by the way, for a correction. With the Fed buying it all, it just doesn't happen anymore. All right, people, look, important video. Please get it out there. Please share it. I will see all of you at the end of the day.